Throughout my multiple dividend growth portfolios, as of right now, I think I'm sitting at close to 2,000 shares of JEPI if you were to add up all the JEPI across my portfolios. Now for reference, just in this one portfolio alone right here in the screen, you can see I own 671 shares that are currently valued at around $37,000. Now the reason I bought so many shares of JEPI in the past was because I was hopeful of some ETF price appreciation, but mostly because I was interested in earning a massive amount of dividend income per year. But with the most recent JEPI dividends basically falling off a cliff, even the last dividend payout as far as the end of July being just 29 cents per share. The JP Morgan Equity Premium Income ETF definitely has me as well as other investors wondering, are there better other opportunities out there in the markets? Well, in this video, we're going to dig deep into the JP Morgan Equity Premium Income ETF, known as JEPI, explain exactly what it does and how the ETF works. Then later on in the video, I'm going to explain exactly why I'm considering selling off my 2,000 shares of JEPI and exactly what I'm planning on buying. Now, if you personally hold JEPI or maybe thought about it, definitely stick around because you are not going to want to miss a thing. So before we dig deeper into JEPI's recent performance and of course the recent dividends, let's head over to the JP Morgan website and learn all there is to know about JEPI. The JEPI ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. The fund is managed by a set of portfolio managers with over 60 years of combined experience. Now, the fund not only invests in equities, but also utilizes options as a way to generate higher income by writing out of the money S&P 500 call options. And because the JEPI ETF is so focused on a strategy of high income based approach, and this is not only from dividend stocks, but also utilizing derivatives and cover calls to juice the high distribution yield, with the goal being that between the dividend payments and the premium, the shareholders should be passed along a good sized dividend on a monthly basis. Now, JEPI is very well known for this covered call strategy. And if you didn't know, a covered call is an option contract where the option seller owns the underlying stock or ETF that they are going to sell. Selling a covered call to a third party gives the buyer the right to purchase the underlying security at an agreed upon price, which is known as the strike price, by an agreed upon date, which is known as the expiration date. Every option contract has a buyer side and a seller side. So when selling the option, you earn the premium, the buyer pays the premium. Selling a covered call means that if the underlying security price goes above the strike price by expiration, you would be required to sell the shares to the opposing side. Now, by implementing this covered call strategy, JEPI doesn't only earn a large amount of premium on an ongoing basis, but also by selling covered calls, it helps with downside protection if the market was to really turn for the worse. So now that we're all up to speed looking at JEPI's year-to-date performance, it's only up 2.06%. And this is honestly pretty disappointing considering JEPI does have a majority of technology in the overall portfolio. And even with top 10 holdings like Amazon, Adobe, MasterCard, Microsoft, and others, you would think that JEPI would be up much more year-to-date. For example, comparing JEPI to its brother JEPQ. JEPQ is up 19.38% year-to-date, and that's not even counting dividends. And I know JEPI does offer some decent dividend payouts, so even though the overall ETF price return does not paint the whole picture, it still definitely is a piece of the puzzle. The next reason I'm considering selling off JEPI is of course because the slouching dividend payouts that JEPI has had over the past few months. Now, as of filming this video, JEPI did announce a higher dividend payment than last month, so things do seem to be going in the right direction, at least for now. And this was of course because the volatility index, the VIX, definitely spiked nicely back mid-August, but since then, as you can see, the VIX has once again dropped off a cliff. And the way that the JP Morgan Equity Premium Income ETF works, the lower the volatility in the market is, the lower the dividend payouts are going to be moving forward. Which is another one of the reasons on why I'm considering selling off JEPI and moving the money to something else. I don't necessarily want to be so reliant on having the VIX spike up on a monthly basis, because looking at the VIX in the last 6 months, it's not necessarily going to do that every single month. Now, one of the ETFs I'm considering moving some of the money from the JEPI proceeds, if I decide to sell it, is to buy into the JEPQ ETF. Now, to look a little bit deeper into JEPQ, let's head over to the JP Morgan website. So over here on the JP Morgan Asset Management website, it says JEPQ NASDAQ Equity Premium Income ETF, and the fund's overview is pretty simple. It says that JEPQ generates income through a combination of selling options and investing in U.S. large cap growth stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. This fund also seeks to deliver a significant portion of returns associated with the NASDAQ 100 index with less volatility. Now, lastly, this fund constructs a long equity portfolio through proprietary data science driven investment approach designed to drive the portfolio allocations while maximizing risk adjusted expected returns. Now, what's kind of cool about this is they actually have the entire investment process laid out on the JP Morgan website. So in more detail, it says that applied data science processes utilizing 40 plus years of JP Morgan proprietary data to create a fundamental framework for security selection and portfolio construction. That's number one. That's the underlying equity portfolio portion of this entire investment strategy. Now, with that, an option overlay. When it comes to options, 1 month out of the money call options designed to generate income and give investors a portion of the upside with reduced volatility. And with this, it equals JEPQ, a well-represented, fundamentally driven NASDAQ 100 strategy that seeks to provide clients with a monthly distributable income via option premiums and dividends. Now, JEPQ's dividends have also been moving down over the last few payouts for the most part, and this is once again due to volatility. But at least with JEPQ, there is more upside potential because of the holding breakdown. And for me personally, I'm definitely optimistic in technology from here on out throughout the rest of this year and beyond. So JEPQ might be a better option for me moving forward. But I want to hear what you guys think down below when it comes to JEPI and the most recent JP Morgan Equity Premium Income ETF's performance. Is the JEPI ETF something that currently has a spot in your portfolio? Or like the way that I'm thinking, is there something better off that can take its place? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.